One of the first questions families ask me after they learn a little bit about reverse mortgages is this: Dale, how much money could mom actually qualify for? Or sometimes they'll ask, we have a lot of equity in the house. Does that mean we'll qualify for a large reverse mortgage? Those are fair questions because if you're trying to figure out how to pay for home care, whether remaining at home is realistic or simply trying to understand your options, knowing how much home equity may be available can make a big difference. But here's the challenge. There isn't one simple answer. There isn't a chart where everyone with $1 million home automatically qualifies for the same amount. Every situation is different. Today, I'm going to explain the 5 biggest factors that determine how much someone may qualify with the reverse mortgage and why I believe families are often asking the wrong question. Hi, I'm Corpus. I'm a Senior Transition Strategist, Realtor, and reverse mortgage specialist based in the San Francisco Bay Area. I help families figure out how to pay for senior care, especially when a home is involved. Whether they're trying to remain at home, sell a home to fund future care, move in assisted living, or simply understand how home equity fits into the bigger picture, my role is to help families understand all of their options so they can make informed decisions. This is another episode of Sandwich Generation Solutions, powered by the Simplify Senior Transitions podcast, where we bring clarity to the housing, care, and financial decisions families often face during some of life's biggest transitions. Let's dive in.
Welcome to the Simplify Senior Transitions podcast, where we help families navigate senior living, real estate, and everything in between. Hosted by Senior Transition Specialist Dale Corpus, this show brings you expert insights, real solutions, and stress-free strategies to make senior transitions simple. Ready to dive in? Let's go.
Factor 1. One of the biggest factors that determines how much someone may qualify for is age. Generally speaking, the older the youngest eligible borrower, the greater the potential amount available through a reverse mortgage. That surprises many people. They assume home value is the biggest factor. It's certainly important, but age also plays a significant role. That's because reverse mortgages are designed to help homeowners access home equity while continuing to live in the home. Every person's situation is different, so age is just one piece of the overall picture. Factor 2, this one probably isn't surprising. In general, homes with greater value may provide access to more available equity. But here's something many people misunderstand. Just because your home has doubled in value doesn't automatically mean that you'll have access to all of that additional equity. There are lending limits, program guidelines, and several other factors we'll discuss today. So home value matters, but it isn't the only factor. Factor 3, existing mortgage balance. This is another piece families often overlook. If there's already a mortgage on the property, that loan generally needs to be addressed as part of the reverse mortgage transaction. So imagine 2 neighbors. Both own homes worth exactly the same amount. One owns the home free and clear, and the other still owes several $100,000 on their existing mortgage. Even though the homes have identical values, their available proceeds could look very different. That's why understanding the full financial picture is so important. Factor 4, interest rates and loan guidelines. Another factor people don't always realize is that available proceeds can also be influenced by current interest rates and program guidelines. These aren't things families control. They simply reflect the lending environment at the time someone applies. That's the reason why the amount someone may qualify for today could look different than it would have a few years ago or even a few years from now. It's another reminder that reverse mortgages should always be evaluated based on today's circumstances rather than assumptions or outdated information. Factor 5, your overall goals. This is the factor I think matters the most, because one question I almost never start with is, how much money do you want? Instead, I usually ask, what are you trying to accomplish? Are you trying to pay for home care, remain at the home longer, eliminate an existing mortgage payment, create additional monthly cash flow, fund home modifications, help reduce financial stress during retirement? Because once the goal becomes clear, the amount of money you actually need often becomes much clearer too. Let's look at a simple example, a real world example. Imagine an 80-year-old widow who owns her home outright. Her children are worried because she's beginning to need help a few days each week. Their first instinct might be to ask, how much can mom qualify for? But that's not actually the most important question. A better question would be, how much additional income or available funds would allow mom to safely remain at home while receiving the care she needs? Those are two very different conversations. One focuses on borrowing as much as possible. The other focuses on solving the actual problem. That's the conversation I prefer to have. The biggest misconception? One misconception I hear fairly often is this: if I have a lot of equity, I should borrow as much as I possibly can. Not necessarily. Sometimes borrowing less makes more sense. Sometimes another strategy makes more sense. Sometimes selling the home is the better option. Sometimes moving closer to family. Sometimes assisted living. Sometimes home care. The reverse mortgage isn't the goal. Helping your family accomplish its goals is the goal. Here's what I tell families. One thing I always remind families is this: don't focus on the maximum amount you could qualify for. Focus on the amount that helps you accomplish what you're trying to achieve. Sometimes that's more, sometimes that's less. The best financial strategy isn't necessarily the one that produces the largest loan. It's the one that creates the greatest peace of mind. So let's wrap up. So how much money can someone get from a reverse mortgage? It depends. The amount available is influenced by factors like age, home value, existing mortgage balance, current loan guidelines, and perhaps most importantly, your family's goals. Because at the end of the day, I don't believe the better question is, how much can I get? I think the better question is, how much do I actually need to accomplish what's most important to my family? That's a very different conversation, and in my experience, it's usually the one that leads to better decisions. Before we wrap up, I do want to mention something important. Every reverse mortgage program is different, and individual eligibility and available loan proceeds depend on many factors, including age, home balance, existing mortgage balance, current lending guidelines, and the borrower's unique circumstances. This episode is intended for educational purposes only and should not be considered legal, tax, financial, or lending advice. Before making any decisions, consult qualified professionals who can evaluate your specific situation. This has been another episode of Sandwich Generation Solutions, powered by the Simplify Senior Transitions podcast. If you're trying to figure out how to pay for senior care, especially when a home is involved, I invite you to explore the free resources I've created for families navigating these decisions. For personalized guidance, educational resources, check out my AI Explorer at simplifyseniortransitions.com/start here. You can also browse conversations with senior living experts, elder law attorneys, home care leaders, financial professionals, and families navigating these decisions every day by going to simplifyseniortransitions.com/podcast library. If this episode helped you better understand how reverse mortgages work, I'd really appreciate it if you'd subscribe, leave a 5-star review on Apple Podcasts or Spotify, and share it with someone who's helping an aging parent plan for the future. I'm Dale Corpus. Thanks for watching, and I'll see you on the next episode of Sandwich Generation Solutions.